Turkish President Recep Tayyip Erdogan has revealed a former US banker as the country's new central bank governor.
The appointment of Hafize Gaye Erkan is the latest sign that the newly re-elected president is shifting away from economic policies which some have blamed for recent problems such as rampant inflation and a plunging currency. Erkan has held senior roles at Goldman Sachs as well as the recently defunct First Republic Bank. She will be the first woman to hold the post. Well, let's talk now to Timothy Ash, who's an economist at BlueBay Asset Management in London. Welcome back to the programme, Timothy. Good to see you. So what do you make of the appointment of Hafize Gaye Erkan? What does her appointment say about Turkey's monetary policy, especially alongside a more economically orthodox finance minister?
Yeah, well, this was Gaye basically was Şimşek's nomination. So evidence that Şimşek is building his team, that's the finance and treasury minister, former Bank of America, Merrill Lynch, economist. He's running policy now. He's talked about rationalisation of policy, which people assume is a move to orthodoxy, which means in terms of central bank policy, it's back to demand management using interest rates. And we'll have to wait actually till June 22nd, which is the next NPC meeting, to see whether the new governor, Hafize Gaye Erkan, will hike policy rates. But we think this is a move towards normalisation.
There have been numerous central bank governors in recent years in Turkey. Do you think she'll be able to make her mark? Do you think she will be able to perhaps spearhead a shift in policy?
Well, that's what everyone's asking. There's perhaps safety in numbers. There are three orthodox thinkers within the current administration. Erkan, the central bank governor; Şimşek, as I mentioned, the finance treasury minister; and then Cevdet Yılmaz, the vice president, former planning minister. And I guess maybe there's some safety in numbers here. Erdogan has a long track record of removing central bankers and officials that don't believe in his unorthodox policies. But I think something's a little bit different here this time around. I mean, I think we are seeing perhaps a change of advisors around Erdogan. Some people in the family, I think, are more orthodox in views. I think people are telling truth to power. And the reality is that Erdogan's policies could not continue. The very low interest rates, the drive for growth meant that Turkey was running big imbalances, very large current account and trade deficits, high inflation, the economy's been overheating. There needs to be a period of lower growth, and that means, higher interest rates to slow domestic demand are required.
And how do you think this appointment, alongside those others, will be seen internationally? Is it something of a step on the road to restoring confidence?
Well, I mean, you've got an Islamist president in Erdogan, and he appoints a secular woman as central bank chief with, Western bank experience. I mean, that's a good look. I think, the financial press, I think, will be running about this story. And, I think certainly international investors will like it. A lot of focus also at the moment on the decision by Turkey whether or not to continue to block Sweden's NATO bid. If Turkey, for the July NATO summit, green lights Sweden's bid, that in combination with the appointment of these very market-friendly individuals who've worked in Western banks, I think will signal actually that there's some moderation, there's a reach out to the West, maybe an easing in the relationship or improvements in the relationship. So that's a positive.
And I want to ask you about the currency, the Lira. We've seen more falls in recent days. What do you think is going to happen next to that?
Well, it's falling because in the run-up to election, the central bank probably used around $25 billion defending the currency, artificially maintaining it as a signal to voters of some kind of stability. Unfortunately, it's overappreciated. It's overappreciated because they didn't allow the currency to adjust for inflation. It's not sustainable any longer. They've had to let the currency go. That's what they've done. It's a really significant move from 19 against the dollar to something like 23 and a half at the moment. It may continue weakening, depending on whether the new team can signal newfound confidence in them and Turkey's economic policies. And if ultimately they probably need to increase interest rates. Policy rate's 8.5%, inflation is just below 40, massively negative real interest rates that really with a large current account and trade deficit, a lot of demand for dollars, is just not sustainable. It doesn't add up. So they have to go back to orthodoxy. They have to raise rates. If they're going to close that big current account and trade deficit, they're going to have to slow domestic demand for imports and hopefully boost exports with a cheaper currency as well.
Timothy, good to talk to you. Great to get your thoughts today. Thank you for joining us. That's Timothy Ash from BlueBay Asset Management in London.